While the average investor is panic selling, dumping their crypto at a loss, billion-dollar institutions are quietly buying more Bitcoin than ever before. BlackRock, Fidelity, Morgan Stanley, the titans of Wall Street are moving in. The question is, what do they know that we don't? For the past few months, the headlines have been brutal. Crypto crash wipes out billions. Is this the end of Bitcoin? It's a narrative of fear, designed to shake out the weak hands. And it's worked. Many retail investors have been scared away, convinced the party is over. But if you look beneath the surface, past the noise and the fear-mongering, the data tells a completely different story. Wall Street isn't leaving crypto. It's doubling down. The numbers are staggering. We are not talking about small, speculative bets anymore. We are talking about a fundamental shift in the financial world. These are charts showing institutional inflows, headlines from major financial news outlets, and snippets from official reports. The evidence is undeniable. The smart money is not only staying in crypto, it's increasing its position during this downturn. They see this crash not as a crisis, but as a once-in-a-generation buying opportunity. While everyone else is running for the exit, they're calmly building their portfolios for the next major run. Let's get specific. This isn't just a hunch. The evidence is concrete and overwhelming. A recent survey from State Street, one of the oldest and largest financial institutions in the world, revealed that over 50% of their institutional clients plan to double their exposure to Bitcoin by 2028. Let me repeat that: double their exposure. These are not reckless gamblers. They are calculated, long-term strategists managing trillions of dollars. Then there's Morgan Stanley. For years, they were cautious. Now, they've opened the floodgates. Morgan Stanley now allows all of its clients, including those with retirement accounts, to buy Bitcoin and Ethereum directly. This is a massive vote of confidence. When a firm like Morgan Stanley integrates crypto into its core wealth management services, it's signaling to the world that this asset class is here to stay. And it doesn't stop there. BlackRock, the world's largest asset manager with over $10 trillion under management, launched its own Bitcoin ETF. The result? It became one of the fastest-growing ETFs in history, accumulating billions of dollars in assets in a matter of weeks. This isn't about a few rogue traders making risky bets. This is mainstream finance systematically adapting to a new reality. These institutions are putting their money, their infrastructure, and their reputations on the line. The era of crypto being a niche experiment for tech enthusiasts is over. This is the era of institutional adoption, and it's happening right now, right in front of our eyes, disguised by the market's temporary fear. So what does all of this mean? When the biggest, most conservative financial players on the planet commit billions of dollars to an asset class, especially during a downturn, it's not speculation. It's strategy. They're not just buying coins, they're building the financial plumbing for the future. Think about it. We are seeing Trade, a platform used by millions of everyday investors, preparing to integrate crypto trading. We are seeing the development of sophisticated custodial services designed to hold billions in digital assets securely. And of course, the explosion of spot Bitcoin ETFs, which have made investing in crypto as easy as buying a stock. This infrastructure is permanent. It's expensive to build, and it's designed for the long haul. Institutions don't spend billions building bridges to nowhere. They build bridges to where they know the future of finance is heading. Look at these charts of institutional holdings and ETF inflows. The trend is crystal clear. While the price fluctuates day to day, the underlying institutional commitment is only going in one direction: up. The message they are sending is powerful and unambiguous. They fully expect this market to not only survive but to thrive and reach new, unprecedented heights. They are betting on the long term, and their actions speak far louder than any fearful headline. So, the billion-dollar question is, how can you, the retail investor, use this knowledge to your advantage? The answer is simpler than you think. It's not about timing the market perfectly or finding the next hidden gem. It's about shifting your mindset from a short-term gambler to a long-term investor, just like the institutions. First, start watching the right signals. Instead of getting caught up in the 24-hour price charts and social media hype, pay attention to institutional filings and ETF inflows. Data from sources like the SEC or specialized analytics platforms can show you exactly where the big money is moving. When you see billions flowing into Bitcoin ETFs, that's a powerful signal of conviction. Second, and this is crucial, avoid panic trading. The market is designed to trigger emotional responses: fear when it drops and greed when it rises. Institutions don't operate on emotion, they operate on strategy. When the market dips, they don't sell, they accumulate. By mirroring their long-term conviction, you can insulate yourself from the noise and make rational decisions. Your strategy should be based on years, not hours. Finally, focus on quality. Institutions aren't buying random, unproven coins. They are concentrating their capital on assets with strong utility, established networks, and clear value propositions. This means Bitcoin, the digital gold and the bedrock of the entire ecosystem. It means Ethereum, the dominant platform for smart contracts and decentralized applications. And it means looking at other high-potential projects with real-world use cases, like Solana, which is building a reputation for speed and efficiency. Stick to the blue chips of the crypto world. Perhaps this crash isn't the ending that so many people fear. Maybe, just maybe, it's the necessary consolidation before the next monumental chapter. History often rhymes. Think back to the brutal bear market of 2018. The sentiment was exactly the same. The media declared Bitcoin dead. Retail investors fled in terror. But the people who understood the long-term vision, the ones who held through the fear, and perhaps even added to their positions, saw their conviction rewarded in ways they could have never imagined. Many of them became the millionaires of the 2021 bull run. When you feel that knot of fear in your stomach, zoom out. Look at the long-term chart of Bitcoin. What you see isn't a straight line up, but a pattern of dramatic peaks and valleys, with each valley being higher than the last. Each crash has shaken out the speculators and laid a stronger foundation for the next wave of growth. This time is no different. The fear you feel is the price of admission for life-changing returns. The greatest opportunities are never found in comfort and certainty. They are found in moments of maximum pessimism. If Wall Street's smartest minds are betting billions on crypto during the storm, if they are building the arcs while everyone else is running from the first drops of rain, then maybe it's time we stop trying to predict the weather. Maybe it's time we stop running from the rain, and instead, learn how to surf the flood. Thank you so much for watching. If you found this perspective valuable, make sure to hit that like button, subscribe to the channel, and turn on notifications so you don't miss our next deep dive. Let me know your thoughts in the comments below. See you in the next video.